Hey, Mad Money fans, check the bottom of your screen for an exclusive offer. Next.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. COVID started it, inflation cemented it, and now it's become a fixture. I'm talking about the unrelenting crunch in old line retail. We see it pretty much every single day these days. There's just this endless erosion of customers, and more importantly, a feeling in the stock market that there's no coming back from many of these chains. Even on a sedate day, like today, where Dow inched up 6 points, S&P advanced 0.07%, NASDAQ edged 0.01% higher. These stocks just, they can't seem to find a floor. You can see it, sagging prices of Gap stores, Nordstrom, Kohl's, and Target. You can spy it in the death spiral in shares of Walgreens and Boots Alliance, or in the endless pressure on the stock of CVS. You know what's happening with the stocks of Foot Locker, Dick's Sporting Goods, Best Buy. Those are pretty good companies. It's obviously causing the collapse of the dollar store stocks, Dollar General and Dollar Tree. Those are supposed to be the companies you go to when things get tough. It's a sense that, frankly, time has passed them all by. COVID created a world where people learned something new. During the pandemic, they sampled. They tried the club at Costco and ended up saving a huge amount of money, shopping in a place that's much cooler than they thought. I've seen a dozen TikToks, not paid for by Costco, by the way, about how much people love shopping there. A new book, The Joy of Costco, just came out, talking about the treasure hunt from A to Z. The free samples are back. The hot dog prices haven't changed. It's just a cooler place than we thought, if it's the first visit. Or during the pandemic, people may have sampled, or most likely resampled, Walmart, and discovered it wasn't the Walmart of old. Instead of those little Debbie snacks piled up right when you walk in, or the giant towers of cookies and donuts, and the aisles that are just such a turnoff to anyone at all health conscious, which is a lot part of the country these days, you find health foods. I kid you not. They have this gigantic aisle when you walk in, a long display of nothing but natural fruit and veggies that rivals that of Whole Foods. It's monumental. You come away thinking that you're in a different store entirely from your last visit. The lighting's great, aisles are clear, merchandise sharp, and I didn't need to call over a single clerk to buy anything, unlike a drugstore. Finally, during the pandemic, we saw a change in perception of the company that is Amazon. We realized that it could bring a ton of merchandise to your house and do so in the same day. You order in the morning, you get home from work, and there it is. That disrupts our shopping habits, because if Amazon can do same-day delivery in the essentials, you don't need to make a detour to Walgreens or CVS or Rite Aid during the workday to pick them up. Because of the immense shoplifting problem in this country, all the best stuff is kept under lock and key at the drugstores, and they don't have enough people to easily help you unlock it. Amazon's less bothersome. You don't have to carry it home. The anti-shoplifting methods at our modern-day drugstores seem cumbersome and intrusive. Who wants to beg to buy? Plus, in many drugstores, it's the branded version behind the lock and key. The store brand are right there for the taking. Let's face it. The current version of drugstores in this country just doesn't really set up to do anything other than deter shoplifters. They're not convenient, they're not quick service. If you can't get that level of convenience, it's better to go on your computer or your iPhone and order what you want from Amazon, right to your doorstep. Sure, there's a pharmacy in the back, and yes, both Walgreens and CVS have embraced health. But it's not enough to offset the front. So for retail, COVID brought a massive sampling, Costco, Walmart, and Amazon, and after the sampling, people are sticking with them. It turned out to be habit forming. Why? One big reason is the stunning wave of inflation that has never receded in this country, the one that the Fed's so worried about, and you're worried about. All stores have had to raise their prices. Right now, there's a gigantic tug of war going on behind the scenes between the retailers and their suppliers. They're fighting over who eats the cost of inflation, and not many retailers have the heft to beat the big national brands. But Walmart and Costco are the two largest retailers. You can't do business in this country without being in their stores. Suppliers have to operate on their terms, or they simply don't get in. Other than those two, only Target might have that kind of power. What makes Walmart and Costco so special is that if they don't like the prices they're quoted, they can just go and make their own store brands and put them side by side. At Walmart, they often have a generic offering right next to the branded version, something you can't tell the difference except for the fact that the price is often dramatically lower. But if you want to see what's really killing the rest of retail, I want you to go to Costco. There you see their Kirkland brand, which has an astonishing attribute. It's both cheaper and better regarded than the premium brands. In fact, it's an ultra-premium brand itself. That's not me talking. That's the consumer. Because Costco's made a study of how to make these things both better and cheaper on its own. They'll try to replicate and improve upon pretty much anything if it can save the club members money. Do you know that only once has it failed to outdo the branded version, and that was with soda? They didn't catch on. Hard to beat Coke and Pepsi at their own game. Everyone else, fair game for Kirkland. As for Amazon, even as the FTC is after them, they've done more than anyone else to keep consumer prices low, and they have done remarkably well in doing so. But that has, even at the cost of some of their suppliers. Hey, member of the FTC, that's called capitalism. These three retailers are fighting inflation in goods that never came down after all the pandemic era price increases, or at least they never came down at the competition. Oh, and with gasoline going higher, save money. Don't drive anywhere. Just shop at Amazon Prime. It doesn't help that millions of Americans now need to start repaying their student loans again. That's $70 billion worth of breaks. Losing that repayment moratorium is going to make you even more value conscious. More people going to Walmart, Costco, and Amazon. Now, I kept thinking that there would come a day when we return to normalcy. You have all those Walgreens strategic locations. Kohl's got this great Kohl's Cash program. Closing Gap, really cheap. I still like going to Target. I've been there twice last month. But it's more than a trend now. It's a reality. You know it. I know it. The stocks of these companies say they're all in trouble. Macy's has a more than 6% yield here. Extremely profitable, though. Just announced they're going to hire more than 38,000 people for the holidays, down from 41,000 last year, though. Nordstrom owns the Rack. Very good grower. Yields 5.2%. Most worrisome, Walgreens has an 8.7% yield and just lost its turnaround artist CEO, Roz Brewer. Those high yields worry me. I know many of you might be tempted to think that this is your chance. Well, look, we were tempted to dive in Foot Locker for the investing club. Sure enough, we figured bountiful dividend, excellent CEO, had a floor underneath, but then the dividend was pulled out from underneath and the stock got crushed. Our bad. The disparity between the three have-nots and all the other three halves and the other have-nots is so stark that you might believe there could be no comeback for the losers. I think their stocks are actually doing worse than the companies themselves. Sure, they've been hit by theft. We know it's particularly bad at Target. Yes, they can't put the screws to vendors like the other big guys, but they aren't worthless. And if they merge, they could create powerhouse competitors. Yet the stock market says these stocks are all value traps, businesses that aren't coming back, a bunch of Bed Bath & Beyonds in waiting. Here's the bottom line. I wish I could tell you to buy the beaten-down retailers, but the one thing I know is that buying best-of-breed is the way to go. And at this stage in the retail world, there are only three best-of-breed general merchants, and they are Walmart, they Costco, and Amazon. Let's go to John in New Jersey. John.
Good evening, Jim. How you doing today?
I am doing well, John. How are you?
Doing okay. Thanks for all you do, first of all.
Thank you.
My big question is about Johnson & Johnson. Going on 3 years holding the stock. Bought it for long term, but I guess right now I'm just frustrated in the company and the fact that the spinoff with Kenvue really hasn't benefited them yet. 2.9% yield isn't great right now.
Well, look, I think the problem, remember, the stock did go up initially when they did that. That's when the investing club, that's when we sold it for the Charitable Trust. We thought it was up on a spike. The problem here, I'm going to be plain and simple, okay? It's the talc asbestos problem. This is what happens to companies that are being sued if they have anything to do with asbestos. J&J doesn't think they do. I don't think they do, but it doesn't matter. The juries do. Often. Not all, but often. All right, buying best of breed is always the way to go, and there are only three. Walmart, Costco, and Amazon. Oh, everybody tonight, what the heck happened to the stock of Adobe after earnings? I'm digging into the Cloud Kings pullback and what you should make of it. Then RH hit you with a monster buyback this year, repurchasing about 23% of its shares. So what other companies are following in the luxury retailer's footsteps, and could it be a trend worth watching or maybe even buying? I'll reveal the names. And is it time to dip your toe back in the water after Oracle's post-earnings collapse? I'm getting the latest in the story direct from the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.